Hey everyone, I'm Corbin Fraser, and welcome back to our weekly journey through the cryptoverse. The air is buzzing with the latest technological breakthroughs, regulatory shifts, shaping the future of Bitcoin and cryptocurrency. Let's dive into some of the most compelling stories from this past week over at Bitcoin.com news. The big news this week, of course, is Bitcoin's fourth halving event, which occurred on the auspicious date of April 20th, which is, of course, known by all the crypto vape smoking, Pepe loving crypto degenerates as 420. So the halving was another huge milestone for Bitcoin that sliced mining rewards in half for the fourth time. Interestingly, that drop in mining rewards has so far been offset by this massive spike in Bitcoin fees, which are also rewarded to miners. So more on that in a quick minute here. But first, alongside earnings fluctuations, Bitcoin's first difficulty adjustment post-halving has pushed mining difficulty to another all-time high. So this increase means that the competition among miners is fiercer than ever, requiring more sophisticated tech to stay in the game. This means that miners got to put more mining power towards it, more physical power, more mining compute, more ASIC miners, more warehouses of nerds just cramming blocks down our throats. But it's also confirmation that, of course, the halving has not dampened miner interest, which is, of course, a good sign, given we want Bitcoin's long-term sustainability over here at Bitcoin.com as well. So, on the other hand, something that maybe not so sustainable is the current fee situation over on Bitcoin. You'll see this beautiful purple graph here showing some very spiky fees. If you actually tried to use Bitcoin in the last few days, you may have noticed that fees are basically just through the roof. In the first few hours after the halving, fees spiked to new records, above 1,000 Satoshis per byte, which translates to something like over $100 for an average transaction on Bitcoin. It's not exactly a great experience for this whole idea of a peer-to-peer payments network. And of course, Bitcoin.com and us and Roger, we didn't warn everyone. We didn't warn everyone in 2015 or 16 or 17 or 18 that, hey, maybe Bitcoin should scale and, maybe you guys, if you're interested in that topic, that's a whole other thing, but you should go maybe read the book, Hijacking Bitcoin by Roger Ver, available on Amazon. Trending #1 in the whole Bitcoin economics category. Go check that out, It's a shame we were so right. But moving on. With absurd transaction fees, Bitcoin ATM operators basically had to shut down. They were telling users, if you want to buy Bitcoin, we can enable this for you, of course, but each transaction is going to be something like $50 in fees, which is kind of insane. So you think about that. It's you want to buy $50 of Bitcoin? Well, it's going to cost you $50. So you're going to have to spend $100 to get $50. Insane, right? So, what's causing this? Who's to blame for this, this recent fee spike? And, it seems like it's actually Runes. So at the same block as the Bitcoin halving, the Runes protocol launched on Bitcoin. And while it's not strictly speaking on Bitcoin, since nothing's actually changed on the Bitcoin code, you can think of Runes more like an additional layer that uses the Bitcoin network and a quirk within it, where you can, see you can only see what's going on if you put this special set of glasses on to actually understand and decipher what's there on the underlying Satoshi. So created by the same man behind Bitcoin ordinals, which are like NFTs on Bitcoin, but they didn't want to call NFTs on Bitcoin NFTs, so they called them something else like ordinals. But yeah, the same crew. Runes are an attempt to create a new fungible token standard on Bitcoin. So this is in addition to the already existing BRC20 fungible token standard. So the creator of Runes, Casey Rodhammer, really interesting guy. He's got some cool tech. He's actually trying to build stuff on Bitcoin. So for that, I commend him. But he calls this whole idea of shitcoins on Bitcoin. And I think that's probably a pretty accurate description of, what's going on here, at least for now. If we take a peek, take a quick little look at, some of the things that are happening on Runes since launch. It's not exactly the groundbreaking projects, but there's stuff that people are interested in. Of course, you've got Pepitoshi Nakamoto, you've got Satoshi as a Chad, you've got Elon Nakamusko, and I see here Dope Grandma Coin. So we're talking ace quality memes here, but memes are the trend right now. So some people are saying Runes may one day support things like DeFi on Bitcoin or US dollar stablecoins on Bitcoin. But for that to happen, something will probably need to give, since paying $100 to move, money around is not exactly the future of finance. But then again, many people, including Runes creator Casey Rodhammer himself, claim that high fees are actually required in order for Bitcoin's security model to continue functioning as the block reward continues to have every 4 years. Which brings us to another attempt at innovation on the Bitcoin network. This one perhaps more serious in nature and also perhaps offering a solution to the problem of high transaction fees. So I'm talking about the Stacks network, which recently launched its Nakamoto upgrade. So a quick background on Stacks. It's a Bitcoin Layer 2 protocol that aims to address Bitcoin's scalability challenges and expand its blockchain functionalities. So Stacks is one type of Layer 2 for Bitcoin. There's, of course, Lightning Network, which is pure trash and nobody uses it. Everyone that tried using it has basically given up. Every business that was built around it is basically thrown in the towel because there's huge problems with both the routing issues, dependency on custodial. You lose money if you don't keep a close eye on it. It's insane. But so there's these alternatives, L2s on Bitcoin, which are all trying now to make Bitcoin low fee and useful, and you can actually do stuff with it again, which is, for me at least, a really interesting idea. But so this Stacks one, which is one of the original or earlier L2s on Bitcoin, they recently had this upgrade, which happened on April 22nd, and it's set to provide developers with enhanced tools for creating smart contracts and applications, leveraging Bitcoin's strong infrastructure. So according to the Stacks team, this upgrade is a strategic move to extend Bitcoin's utility beyond its traditional role as a digital store of value. So the upgrade is expected to introduce faster block times on Stacks, reducing them from the current 10 to 30 minutes per block to approximately 5 seconds. So I don't know if this is going to play how it's going to play out, and whether Stacks is going to gain adoption and acceptance in the world of Bitcoin and crypto. Certainly there are factions within the Bitcoin community that hate anything that's not just HODL and gold and don't build on this thing. But Munib Ali, the co-creator of Stacks, he said something that resonated with me, which I thought was quite interesting. He says, "We're in the midst of a big moment that's all about the return of builders to Bitcoin. Innovations like ordinals, runes, and various layers have made Bitcoin fun again for developers and highlighted the massive opportunity to bring new use cases to the largest crypto economy." It's a great quote, and I'm down with that. I think this whole idea of people making Bitcoin fun again, it's exciting. I'm seeing people actually doing stuff on Bitcoin again, and they're just ignoring the curmudgeons that say don't do anything. They're just we're just going to do it anyways, permissionless. So I kind of like the, I don't give a F, vibe that I'm seeing from, Stacks, and that I'm seeing from these other L2s on Bitcoin. I love the fact that they're trying this. So hats off to everyone building on that and experimenting. But that does, bring me to some exciting news, of course, for Bitcoin.com. Speaking of exciting experiments, we recently kicked off the Verse Voyagers NFT sale. So go visit verse.bitcoin.com. You've got the Verse NFT. It's the first NFT by Bitcoin.com that launched. So far, I think over 4,000 have been minted. So there's 10,000 in total. And yeah, since kicking off public sales and minting on April 24th, the enthusiasm has been very sky high, with community members showing off their Voyagers in our Bitcoin.com and Verse chats. So one of the coolest things about these NFTs is that you can respin traits to customize your character. So, for a lot of NFT mints, you spend some money on an NFT, you might get an NFT that you like or you don't like. Maybe the vibe is weird, the colors are weird, you don't like the thing that the NFT is wearing or doing, and we've given people the ability then to pay a little bit more. They can respin and try to get a new trait. The price of the spins, of course, increases as you spin more. This does kind of counter or de-incentivize people from just rolling until they find a rare. So there's a bit of a cost to do this. And of course, any of the revenue we generate from Verse all goes into the burn engine and supports some deflationary pressure, which is quite cool. But yeah, go check out verse.bitcoin.com if you are interested in minting an NFT on Polygon with Verse. It's about $3 to mint an NFT. So go try it out, and then you get a free spin. You want to build your own character, a really cool little character builder flow. Maybe I'll demo it in another video here shortly. But of course, after you mint one, go check out Twitter and share your NFT, #VerseVoyagers, and you can be entered to win 1 in 20 free Voyager mints. Continuing on our journey, though, through the cryptoverse, a weekly news recap simply wouldn't be complete. We didn't include a little bit of updates on government crackdowns, which, they're always doing. So starting off with the latest, Binance is in the sin bin news. U.S. prosecutors are seeking a 36-month prison term for CZ, former CEO of Binance. The charges underscore severe compliance failures that have not only rattled Binance, but also its massive user base, pushing more people to use self-custody products like the Bitcoin.com wallet app and truly decentralized protocols for trading. Now, meanwhile, halfway across the globe in the Philippines, regulators are pressuring tech giants, Google and Apple, to just kick off Binance's app altogether off their platforms. And the Philippines government is citing major investor risk concerns. Kind of crazy. And in another sweep of regulatory brooms, we've got the founders of the Bitcoin wallet, Samourai Wallet, who are in serious hot water right now, facing charges of laundering over $100 million. Now, this is despite the fact that they never moved a single dollar of any of that. They're a self-custody wallet. Their users are interacting with code. They're interacting with CoinJoin, and the government saying, hey, you simply by allowing that feature in your wallet, you're complicit or something like that, and you're now on the naughty list, and we're going to get you. And so this crackdown highlights, this ongoing debate around privacy in the crypto space, which is a feature, of course, many users hold dear, myself included. So at Bitcoin.com, we stand firm on this whole right to privacy and also stress the importance of using this power responsibly. We're not trying to support terrorists. We're not trying to say hey, this is how you're going to help bomb things in North Korea and whatever else. It's like, people you don't want every transaction you do to be broadcasted on the public blockchain. I think that's it's a ownership of your data. It's ownership of what you release publicly. And for me, at least, I don't need everyone to know if I spent money on coffee or diapers or what I shopped for online or what gift cards I buy or whatever. It's like some people want a little bit of privacy, and all the power to them. And I hope, at least in the U.S., that some political change happens where things get a little bit more crypto friendly there, because certainly right now the vibe is not very crypto friendly. But yeah, in light of this, and actually this was already started before this, but it's a fun little segue. Bitcoin.com, we're going to be supporting Zano, which is an enhanced privacy coin. We're going to be integrating this into the Bitcoin.com self-custody wallet app. And one of the cool things about Zano is that it kind of strikes that perfect balance between safeguarding your financial privacy and adhering to some regulatory norms. They've got these audit wallets there as well that you can, reveal, which is kind of a cool concept, but private by default. And they also have, of course, privacy tokens on their chain, which we're very interested in. So this will help us ensure that we can keep offering you secure and private crypto solutions, but not end up, being hunted to the ends of the earth by Uncle Sam, fingers crossed. So stay tuned on our Zano integration. This is our game changer for Bitcoin.com, and it's going to drastically improve your ability to transact privately, which, for me at least, I think it's everyone's right. So that's all from this week in the cryptoverse, from the halving's impact on Bitcoin's backbone to, of course, shitcoins on Bitcoin, the legal battles shaking the crypto world. Of course, Verse Voyagers NFT, go mint one, $3 in Polygon on Verse, or Verse on Polygon. Go check that out at voyagers.verse.bitcoin.com. And that's it from us. Go visit Bitcoin.com news for all the latest crypto news. It's been another packed week, and make sure you hit like, subscribe, and all the other stuff. Stay curious. Stay secure. As always, keep championing the whole power of Bitcoin and crypto. We'll see you guys next time.